Hi, thanks for stopping by my market report. I am Mike, and this report is about mortgage rates. We try to cover what's influencing or what's affecting mortgage rates on a daily basis and where the trend is going. We don't get into so much what rates are today, primarily because there's several loan programs. There's very different variables that go into it. So for each person, it could be different. So we don't really touch on that. There's plenty of other places you can go and research that or quotes. Uh, we can help you with that if you want to reach out to us one-on-one, but however, we don't really cover it in this report. Now, a little bit about myself is I am a mortgage lender, and I work at the mortgage originator, and I work with a lender in all 50 states. So if you guys are in another state, want to ask any questions about mortgages or mortgage rates, or if you got questions, maybe want me to talk to you a little bit about refinances or looking to buy a property, please feel free to reach out. We can get you guys pre-approved and then finance your next property. So again, please feel free to reach out. So without further ado, let's start off with the economic report that will influence rates today. We'll start with HPI, which is Home Price Index. There's two of them here. We'll start off with the Case-Shiller year over year. So for the month of January. So in December, it jumped up 10.1 initially. However, that was revised a little bit higher to 10.2%. Forecast is calling for a spike to 11%, and it just exceeded that to 11.1%. So as you can see, we are having some huge spikes due to the very low inventory level. The last HPI is by the OFHEO group, and what they index, and what they where they get their data is from Fannie Mae and Freddie Mac, the two conventional mortgages. So this is primarily conforming loan limits pricing. So it could be slightly different because it doesn't really cover the jumbo programs, but this will kind of give you a gauge across the U.S. So its initial one came in at 11.4% back in December, and it came in at 12% for the month of January. So still, overall, very good numbers here for those who are buying homes or even have homes or building equity in their homes. Last but not least, we got the consumer confidence for the month of March. So this is the final report. Initially came in at 91.3. It dipped lower to 90.4. However, it had a higher forecast for the month of March at 96.9, and it exceeded that well beyond, and this is actually a very high number, 109.7. So this will have some ramifications in the markets as we'll touch on a little bit. Let's check out the headline news. Stocks are down. They're still kind of going over. Investors are still kind of going over that Archegos Capital Management. We touched on that a little bit yesterday. They had some calls that came in, and they had some huge huge ratios that they had to cover, and which basically led to them selling off a huge amount of their portfolio, about $30 billion worth. That touched on. So a lot of sectors were influenced. Investors are making sure that there's no more selling going on. So this is something that kind of disrupted the markets yesterday. We saw huge amount fluctuation in the mornings. Some did rebound, like the Dow did rebound back into some positive territory. However, it did leave its mark. Something coming up tomorrow, potentially tomorrow, Biden might be talking about an infrastructure package that will be worth trillions of dollars. Not sure yet how much it was, but there was talk at one point about $3 trillion worth. And of course, again, that's going to have a huge influence on the market as well. And we'll touch on that mostly on the treasuries. We'll touch on that here in a second. So meanwhile, let's take a look, see what's going on with mortgage rates and how they're being affected. We're currently down, as you can see here. We did close down, but we did pull off from the lows. We ended up closing down 9 basis points yesterday. Today, as you can see, we dropped dramatically lower. So most lenders from the East Coast came out with much worse pricing. However, it did subside a little bit. So those who came out with lower pricing earlier on probably may have had a price revision as it did improve a little bit, but we're still down 5 basis points from when we left off yesterday. So if you're looking at this at about the same time, most likely pricing did worsen a little bit from yesterday's close yesterday. So when you factor 9 basis points plus 5 basis points, that would put lenders into the pricing not as good as what we saw the previous day on Friday. So yields, this is a big one. This touched up all the way up to about 1.77 range here. Just above this line, it has subsided a little bit. We're down just under 1.73 at 1.728. So that infrastructure one could be a catalyst to push it up above, because that is a lot of money that's going to be borrowed to spend, and that could push treasuries much higher. So be very cautious out there, and hopefully uh, you guys aren't really, you may want to lock in. This might be a good time to lock in due to the large amount of treasuries that will be needed. This could be a spike for more spending. Remember the last time when we talked about the $1.9 trillion one, we saw a pretty big spike. This could be a $3 trillion, and that could be much worse. And the next lid probably will be right around the 1.95 range. All right, so be cautious out there. Again, if you guys got questions or any concerns, please feel free to reach out anytime. We'd love to be able to talk to you guys. You guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.